着替えて。
All right, guys, what is going on? Hello, and excuse me, welcome to the stream Taco Tuesday. You already know, dog. Welcome to my YouTube channel. Hope you guys came ready to learn. Yesterday we were abrupted by the internet, which I got with tech support yesterday, and they're sending me a new, I forgot what it was called. They're sending me some new shit, but that won't be here for a couple of days. So let us, well, hope for the best, I guess. In trading, hope's not a strategy, but you know. On the device is on the way, so we'll see. All right, we'll see. Chat is members only today. I know a lot of people had questions yesterday that I was not able to get to because of the internet situation, and just I ended the stream later on because it was getting very spotty. So if you guys had questions yesterday that I did not answer, you're welcome to put them into the chat today. But we will do our normal stuff. Normal as in the last, we'll do what we've been doing the last like 3 weeks or a month or so, as far as continuing to review the beginner series ideas as far as low resistant highs, low resistant lows, the inversion, right? The inverted imbalance, right? We'll take a look at some of those and really just go from there. So hopefully, sorry, I shouldn't have had lunch right before. I usually wait till after, but I was hungry as fuck today. Did a workout yesterday, so I'm all over it. You know what I mean? I forgot what I was saying. Hopefully you guys have been studying the amount of opportunities that have presented themselves, right? That's kind of one of the things that I have been trying to push you guys to study, right? To see that there's an abundant number of opportunities. So we'll take a look at ES, we'll take a look at NQ, obviously Nasdaq is what's on your screen, and then we'll take a look at gold as well, and then we'll just, you know, we'll fuck around and find out today, you know what I mean? So sorry, I meant to mute my mic before I did that, and it didn't work. So anyway, what's good? Willow, G, Ibranith, Naruto, Edgar, Jose, Natasha, King Carcel. I mean, happy, where's that? I'll pin that for you. Happy birthday to Ibranith. So I'll pin that up there. So happy birthday to you. What's good? Felix, Naruto, Martin, Mason, Natasha, Convicted Capitalist, Willow, Toby, Flacco, Crocs on my feet. Eli, Naruto. I think that's everybody. Jay, Eric, B, Alex C. I think that's everybody. So welcome. Welcome to the stream. All right. So one of the questions that I did get, someone posted a chart of the continuous contract. So we have rolled over from September to December. Okay. So you can still trade the September contract. Okay. But September is done, and for the most part, and the volume and open interest now is over in the December contract. So you can see it on your chart or on your screen already on my list, right? NQZ, ESZ, and YMZ, and the corresponding micros with each one. Okay, so, and just like yesterday, I just have the old ones on here because we were looking at them yesterday, but we have rolled over, okay? For the most part. The September contracts, I don't think expire until Friday. So after that, it'll be a ripperoni, okay? So I have a theory here for that level there. And I don't really have a way of verifying the theory, but I have a theory about this, and I'll get to that in a minute. But for now, remind me before we hop off here, unless we run into internet issues. Okay, so remind me later, John. Tell me about this theory of yours before we close out for today, provided we don't get more internet issues. Okay. Yes, created equal lows during New York Open, was waiting for that to fall out. Well, September did, because one of you posted a September chart, and the September ES did. I don't think December did, which is, there's a small difference there, and that's okay. But anyway, let's do this real quick. So just like yesterday at the tail end, right, I was telling you guys of what I told you before, right, a lot last year when I said go back, study consolidations, and especially when they have, right, equal lows, equal highs. I said to go back and look at every consolidation, didn't matter what time frame, just to go back and look at it. So we went over that yesterday, right? We talked about how consolidations have buy stops above them and sell stops below them for traders trying to catch a market, going higher on the way up, or they're going to short on the way down to try and catch a market that's, predicted to keep trading lower. And I don't trade like that. But the means, okay, how I utilize these is as targets as well, right? That's like kind of the whole point. Okay, you see up here too, right? So what took place during London for Nasdaq? Let's actually scroll all the way back to London. Okay, so London is pretty much right down here. So we rallied up, left behind some highs, traded lower, and then traded higher, obviously all the way until roughly equities. So before we get to that, okay, you have to look at what happened during London. What was the predominant force here? It was what? Higher. Okay, so a lot of traders who trade London are in open profit, right? The longs who are in open profit. Where are their stops going? Well, if they held through all this and suffered, some pullback and then that continuation, where's their stop going? To these lows here. Shorts on the way down during this leg, where are their stops at? Up here, low resistance highs, right? See how clean that is? Beautiful. The high on the right is slightly lower. See that? Beautiful. So it rallies up, takes that liquidity, right? Now, that doesn't mean that's going to be a reversal. But on this leg higher, and the predominant focus for London was higher, right? By the time equities rolls around, okay, somewhere over here, 830 is going to be close, like right there. Okay. That right there, low resistant lows, and a relatively small consolidation. Okay. You see that? Just right in here, just a general consolidation, somewhat of like a W pattern, whatever. But either way, a lot of traders are going to look at that like a double bottom or, you know, something to that effect. So that could be a downside objective. Okay. Could be. And I didn't tell you this in the Discord because I didn't think this would happen today. That's why I want to tell you the theory that I have behind this. And then 19,626.5. Okay. Now, again, I didn't think we would do that today. So I'm not going to say, look at this, look at this. Okay. I'm not even short. Okay. But the whole point is understanding why these lows here, more specifically the lower one, right? Why that one? Consolidation during London in an up market, and upside liquidity has been taken not once. You got this shit here at 730. So obviously any shorts above these highs going lower, they got yoinked here. All right. And then equities rolls around. So then what do we have here? Highs. There's a higher high. There's a second higher high that clears out everybody. And then what? A third higher high. Did you catch that? Did you catch that? 3 higher highs. Okay. So, and it's just a 1 minute chart. Okay. So I've already got it labeled on here, and I meant to take that off, but it's okay. When you look at the news highs and lows, right? Which is what? That's data, right? Data high, data low. Or I guess you could probably put it right here because it's only 1 minute afterward. But nonetheless, either way, equities open is here, and it runs up for what? Data high. Is the market here, is it closing above that? Is it hitting this level and continuing higher? Or does it tap into that and trade off of it? Taps into it, trades off of it. Taps into it. Oh shit. Drops. Next candle drops. Leaving behind what? This. So at 8:33, which is very important, by the way. At 8:33, what do you have there? An imbalance. If this is a liquidity run, and remember, what is this starting to look like now? Now that you've got all this stuff on here, what's this starting to look like now? It's been a hot minute since I've shown this. I'll bring it back if I can find it. I'll bring it back if I can find it. Dude, I have like, I don't even want to tell you how many screenshots I have. Not just charts, like how many, like, bro, I got to be in the top 10% of traders who have downloaded the most trading view charts. I have to be. I gotta be. And I think it was a chart that had the yellow background, if I'm not mistaken. If I'm not mistaken, chat. Oh, found it. Found it, baby. Look at that shit. Look at that shit. Remember this? Do you remember this, chat? Remember that? Look at it. Consolidation, equal lows or low resistant lows. Accumulation, reaccumulation. Excuse me. Higher time frame concept. Seeking liquidity. Drop lower, distribution, redistribution, seeking liquidity, right? Look at this image here. What's that starting to look like to you? Getting juicy, huh? Is it getting juicy, chat? Consolidation. Now, to be honest, I'm not really sure where all the specific ones would be. Like, I don't know, fucking some shit like that. Accumulation, reaccumulation to go higher. Okay. But since we've taken out highs and I'm aiming for lows, okay, I'm not going to be too worried about the accumulation and reaccumulation. I'm going to be worried about the distribution side. Okay. What do I mean by that? There's accumulation. Okay. So scratch all the drawings except for this up here. Bullish price delivery. You see this blue arrow here? And this red side, bearish price delivery. Okay. So again, don't look at these. Just look at this. Okay. So we have buy side price delivery up to liquidity. And then we have bearish price delivery to opposing liquidity. So what I mean by that is I'm saying I'm not really too worried about marking up the accumulation and reaccumulation because we've already met liquidity. So now I'm going to be worried about what? The sell side. Okay, so I'm going to be looking for shorts to go lower. Okay. Now, continuing on with the idea of yesterday, one of the ideas from yesterday, I tried to harp on this a lot, especially near the end, and that's kind of when I got cut off. Oh, and I found it too. I think it's in Galatians. You'll have to look it up, but it was like, it said something, God will not be mocked. Men reap what they sow. And that's all like one verse. Okay. But that's the tail end of that verse, right? You reap what you sow. You reap what you sow. If you plant flowers or you plant crops and you water them, what happens in a few weeks or a few months? You got your vegetables, you got your herbs or whatever, right? What is utilized on the left side can be utilized on the right side. Okay? You reap what you sow. Let's come back. Because I really want you to get this. Now we can focus on all this shit. When you look at accumulation and reaccumulation, okay? Reaccumulation can become distribution. That's why you see this reaccumulation here. The distribution is, and I know I misspelt it. Okay, this is the one that wasn't corrected. So, look, I'm a seller, not a speller. All right, so we'll just get that out of the way. I spelled it wrong. Piss off, okay? But the point is, distribution, okay, is lower. You see that? Slightly lower here. This redistribution slightly lower than this reaccumulation. You see that? Okay. What is utilized on the left, on the buy side of price delivery, can be utilized on the right side of sell side price delivery. Look left to get right. Okay, thank you, Martin. That'll work too. But I don't know. You reap what you sow just sounds a lot more, I don't know. It just sounds a lot more intense. It sounds a lot more philosophical, you know? But to each their own, okay? Anyway, if this is a liquidity run, right? Why would it be? Because remember, you have data highs here at 7:30, right? There was something at 7:30 that got yoinked. On the way up, right? What did we leave behind? If the news data is going to be a liquidity run, okay, what did it leave behind? What did it leave on the way there? During this particular buy side price delivery, okay? From that low up to that high, this is what I'm referring to. This is your buy side price delivery. Price delivered, right? I am delivered. If you know that meme or video. Price delivered to the liquidity. Okay? So this was buy side. What was on the way there? This imbalance right there. That was left open, right? You have this candle, 830. There's your equities open. Equities, we dropped lower, rallied, came off of it. Next 1 minute candle, 831. We trade lower to this point, 19,805.75. Then we reached 4 data high. Okay. That imbalance was created on the way up, right? What do you think the model is? The inversion model that I gave you in a free video series. That's it. That's it right there. It's the imbalance prior to liquidity run, right? Are we going to buy that? Oh, man. Oh, man, I tried to buy that. Why the fuck would you do that? We just met liquidity. Okay? And we have lows down here. Why on earth would you long that? I wouldn't. It got disrespected. Next candle. Drops lower. Right? So now what do we have here? Look at it. I'll give you one more candle. I'll give you 2 more candles just so we have enough. Oh, 3, I guess. It must have been a new minute. I think that's why it moved over like that. Anyway, so what do you have here now? This red box, that was the imbalance created on the way down. This green box was the imbalance created on the way up. Okay? So what has been sown here shall be reaped later. Ooh, shit. Look at that shit. Okay? Now, this leg here, now we can zoom out and look at it. Okay? Now you see why it's labeled leg 1 and leg 2. Okay? Let's come back. Don't look at all this shit. Okay? You got to look at this stuff individually. I meant to say shorts. That's why this is fucked up, because I misspelled it, and this is supposed to say low risk shorts, not longs. Okay? So I fucked that up. So if you screenshotted that, you got to fix it. That's why you should take your own notes anyway. This should say low risk shorts. I apologize. All right? Because I made the long ones and then I flipped the image and I kept it and I didn't change it. So that's on me. I'm sorry. I'm not perfect. Okay? You know who to talk to if you want perfection. And I don't have any of their numbers, so good luck. Low risk shorts. This is the first leg. Then the second leg run to liquidity. That's what that means. Right? First leg, second leg, both to go lower. Right? So that's why you have that here. There's your first leg. Okay? This first leg here, does that cross anything? Does that cross anything here? Oh yeah, John, this 50% level you talk about sometimes. Yeah. That's right there. That's right there. That crossed 50% early on in the move. You see that? Bam. Premium, imbalance, premium, inversion, premium. What's here? Short-term high right there. Boom. Shorting above old highs. That's the Y slime model. Imbalance on the way to liquidity. That's the imbalance model. Inverted imbalance prior to a liquidity run. That's the inversion model. Second leg here. That's the second leg model. That's 4 fucking models at the same time. Like Hugh Hefner or some shit. All right. Sorry. But look at it. How many models is there? Shorting above old highs, that's 1. Imbalance, that's 2. Inversion, that's 3. Second leg of distribution, that's 4. 4 models. I told you a long time ago you can have multiple models at the same time. Did you think I was lying to you? You think I was fibbing? Huh? You think I was fibbing to you? Look at all the bodies. Where are the bodies at? Respecting the overlap of both. See that? They're respecting the overlap of both. Actually, I'm going to take that one off. Okay? And it does reach into the high end of this. Right? In which I told you yesterday it would. I told you if you short imbalances and you want to have a super tight stop, it can go to the high end of the imbalance. But, and we made a verbal agreement in the chat that what? You can't bitch if you got stopped out because your stop was too tight. I told you that. I told you not to do it. You probably did it. And you probably got stopped out before the big move. Okay, so whose fault is that? Can you frame a 1 to 2 out of that going lower? Yeah. On the way, right? Because that's the liquidity run here. Right there. See that? Boom. Market trades what to what? Liquidity to liquidity. Or this liquidity here. Okay, to there. Now, and I didn't do this either because I didn't want a long, but I did watch it. Okay. Imbalance on the way lower, and it's below an old low. We trade right through it, back into it right there at 856. Okay, that's a long opportunity. 1 to 2, done. So there was a 1 to 2 to go lower, and there was a 1 to 2 to go higher, just in the first 40 minutes of trading. Just in the first 40 minutes of equities. Come on, chat. That's fucking brilliant. Brilliant. So let me see. Wow, Naruto. All right. They weren't that bad. Okay. I've dated some pretty horrible women. They weren't that bad though. Well, maybe 1 or 2 of them, but we're not here to talk about me. We're here to learn, possibly take trades, but it's an interesting day for the PM session today. And yeah, that was also above equities open because equities is here. So you'd be shorting above the open in bearish conditions. You're right. Okay. And here, okay. Now this is the part where some of you might shit yourself. You might not. I don't know. But I'll try my best. Despite everything in here that I've already shown you, everything, all that stuff. Okay, we came up yet again. All right. Now I'm willing to bet that you missed this. I'll get to that in a second, Jordan. I'm willing to bet you missed this. And I missed it too. But upon reflection, I thought this was some gangster shit. Okay? Watch this. Watch this, chat. Hold my beer. That high, equities open high. Remember I talked about that yesterday too? Like the first 30 minutes or so. Anyone who was short here, right? The current high of the day and the current AM session opens right there too. All right. But now our 420 level has left us because now we're in a different contract. So we're a lot higher. Pun. Double pun. Okay. So 8:20 129 and some change. That was the high to go lower. So there's going to be stops here. Now watch this shit. We trade up and a little bit more. And we created an imbalance on the way there. You see that? So we trade, you know, prices. Okay, what's happening right there? What's happening right there? 954. We close at 19,817 and a quarter. But the low end of that inversion is at 819.5. So we have closed below, right? Ooh. What's that right there, chat? What's that right there at 955? What's it doing? What's it doing, chat? Oh, it's running into that inversion, isn't it? God damn. Look at that. Look at that. Can't even fit it all on one screen. Look at that shit. That's pretty sick, isn't it? Right there. So that little move right there, right? Because it traded through the imbalance and then pop, poked right into it. That's the inversion model right there. Ooh-wee. Look at that. That's fucking brilliant. Sells off, makes a new low, comes back up. Now this is what's pretty cool too. All right. Because that was a little hard to watch or hard to see. Because I didn't, you know, I watched the 1 minute, but that was, you might have missed that. Okay. And you might not even like 1 minute time frames. Fear not, my friends. Because I already looked at it on 5 minutes. I already know what's up here too. I already know what's up here. But check it out. Maybe you don't like 1 minute time frames. Oh man, John, that fucking 1 minute, like what the fuck? Okay. Well, look at the 5 minute. Look at the 5 minute. Did the 5 minute not also create an imbalance on the way up right here? Was that respected? No. But again, chat, like I've been saying, what you sow, you shall reap. So that 1 minute was up here. 5 minute comes back for that. Body's respecting it. See that? It does trade to the high end of it, sure. And it trades into this. There's an overlap there. And then guess what? It fucking rips ass. It absolutely takes off down to 19,626 and a half. Which again, I have a theory for, but I don't know if it's true or not. And I sure as fuck don't know who to ask. But this is my theory now that I've been reminded, okay? My theory is we have rolled over contracts, okay? So if traders who were trading September and have closed their positions in order to reopen positions for in the December contract, thinking about Monday, okay, yesterday, if they were to have done that, where do you think the stops would be? Where do you think the stops would be? And that was not during lunch, bro. That was at 10:15. This right here was at 10:15. That's not lunch. Let's go to regular trading hours for a minute. What do you see about yesterday? There's your close. The PM session, in the way that I view it, is here. Okay. Right there. That's like the PM session for me. So you have a close right? So anyone who was long yesterday, where's their stop going to go? Either at the close or maybe one of these lows. But the lowest here, like of, even though there's a low way down here, sure. But like these, for this session, like these lows, okay, that's the lowest one at 19,626. So, and again, I might even be wrong. And that's why I said it's a theory. It's just my theory. Traders trading on Monday who, you know, swing trade, hold positions overnight, whatever. If they are closing positions in September, NQU, and rolling over to NQZ, and they're trading NQZ either from yesterday or even today, right? Where their stop's going to be. And yesterday's low is way down here, but a PM session low is right there. And so there's probably stops resting there. And that is why I believe that low has been taken. Now, again, that's just my theory. I could be wrong. Technically, September doesn't even close until Friday. The contracts don't expire until Friday. So I might be wrong. That's just a theory. Okay? That's it. It's just a conspiracy theory, if you will. Fucking tinfoil hat. Okay? I could be wrong. But nonetheless, that was tagged. All right. Now, if you look at just the regular trading hours, you can see here that when we opened, and I showed you all that stuff in here to go lower, that was what? Above Friday's high. See that? That was above Friday's high. But that first high that was created, that was taken later on. Okay, and that's only a higher high in the electronic, in the regular trading hours here. But that is by definition what? A high, and then a higher high makes what? High resistant highs. So that inversion is what? That is a low risk short. You're shorting into a move higher, this move higher, right? But it's after a run on liquidity, and it's after a day like today, right? Tuesday, that we gapped higher from yesterday. So this is technically a premium market, right? So you're shorting a premium on a small time frame inside of a higher time frame premium as well. So you're in like super premium. And the inversion allows you to wait for the market to tell you, hey, I was bullish and now I am no longer bullish. I have literally disrespected this imbalance so bad. I'm screaming to you, I'm bearish, I'm bearish. I am no longer bullish. Then it trades into the inversion, right? And again, look at it. Look at that candle here. Sure, it trades to the high end of it. And in the moment, that is a big up close body until the close of the candle. So once you see that, what does that make 1020? A next candle entry. Wait, hold on, John. Wait a minute. You said yesterday that instead of just trading the inversion, you said we could just wait for the candle to close and see if it's... Yeah. We talked about that. You can wait for it and then trade the next candle if that's what you want to do. All right. So that's what that looks like. And I was watching this today too, and I wanted to trade this and I didn't. I was watching, I didn't. But when we came off of that 5-minute inversion, what did we leave behind? There's a gap right there. We came right back into it, sold off for that low. And that must be the electronic drawings over here. Yeah, okay. Right? So that's way up there. That gap is way up here. We do roll a little bit higher right at the beginning of lunch, and then we absolutely dominate lower to the downside. So that to me was very clean. Okay. So anyways, that's what NQ looks like. And look, even though, like, if you take everything off, okay, you might take one look at this chart and you might think, oh my God, this is fucking horrible. You might look at this and be like, dude, this is ass. Lower lows, higher highs. This is insane. Well, I would agree. But that's why you have to put the time, price, and context on there. Time. Where's equities? Here. Okay. Equities. That's important. So although we have a high and then another high and then another higher high, yeah, that third or fourth higher high is only the first high in equities. How's that for some arithmetic or calculus or whatever? Y equals MC squared and all that shit. How's that for simple math? That third higher high is only the first high in equities. That fucking fourth or fifth high in the electronic trading hours, that's only the second high in equities. Does that make sense? So it might be a little tricky to understand, but this is why you have to study. You have to study, okay? And I'm giving you all the things that I'm looking at and what I look for. Okay? Oh, we just made a new low of day. I wonder if ES did too. ES followed suit. Nasty work, man. That's fucking nasty work. Nasty work, chat. Nasty work. Anyway, let's zoom out for a minute. I think NQ was a lot cleaner today than ES, but what I will show you for ES is this. This morning, okay, when the current day's candle was higher, right? We took September 3rd's high right there. And then we also reached further, and this wasn't like, I didn't look at this over the weekend. I looked at this, you know, after the fact. But we traded further into this imbalance here. Okay. So that was July 17th on the December contract. So those levels here are just further extended. Okay. So we tapped into it August, tapped into it one more time in September here before that nasty rip. And then today we reached above that and then further into this imbalance. Okay. So when you have that, right? 57.27.5, 57.38.5, and then September 3rd's high at 57.30.5. This makes a lot more sense when you go down to the 5-minute time frame. Now this makes a world of a difference when you understand these levels and why, you know, the smaller time frames were responsive. Because look at it. What's right here? Look up. Look up. And do the same thing we did on Nasdaq. Over here. What do I mean? Okay. Light bulb moment for some of you. What did we do either last week or 2 weeks ago on Nasdaq? Remember that untapped gap on Wednesday? We never got into it. And then Thursday did what? Thursday rallied above Wednesday's high and hit that old gap. And that 1 minute inversion was inside that gap. Do you remember? Chat, drop a 1 if you guys remember. A lot of you have been here following along almost every single stream. Please tell me that you remember that. And I will literally be thoroughly disappointed in all of you if none of you remember that. Okay. So what's right here? 1, 2, 3 highs at 57.33.5. Right? So I watch this short-term low taken. We leave behind an imbalance on the way to liquidity. I'm like, great. I will long that. And then we don't get it. So we go higher instead. Okay. No problem. Not an issue. You know, I mean, sure, it's like, fuck, I could have traded, you know, but I just didn't get an entry. All right, no problem. Just wait. Move on. Liquidity run here, right? Because it's just running above old highs. But what's this level up here? 5738.5, right? That's the high end of that daily imbalance. Okay, what's going on right here? What's going on right here? At 9:54. What's going on there? Liquidity taken, trading lower, right? What did we leave behind? An imbalance that we traded into. The low end responded like a whole 3 points, maybe 4. Okay. And then what do we do right here? We traded beyond the low end of it, right? Ooh, what's that? What's that? Right there. What's that? Inversion. Okay. And it does come back to that, very close to that level. It hits that old high, 53 or 57.30.5 right there. And look what we've done since. That's nasty. That's absolutely disgusting. So again, where is that? This inversion is inside of that old gap here. Sorry, that old imbalance. It wasn't a gap, it was an imbalance. Sorry. But there it is. See that? That's insane. And you didn't learn this shit in the MLM industry, did you? No, the fuck you didn't. You could have, because I did say something, but I didn't harp on it. But you don't have notes like this. Not from back then. The fuck you do. Look at that. Inversion, old imbalance, liquidity run on a small time frame. And we've absolutely ripped. You're welcome, chat. You are welcome. Very free stream. Very, very free stream. Okay. And then we ended up taking these lows down here. Some Asia lows down here. We went all the way for that shit, which is pretty insane. But hey, I don't make the rules. All right. So for the remainder of the session today, let's take a look. I highly doubt we're going to come all the way back up here. Could it rally to 57.22 and some change? It could. That's not unheard of. But what's the focus been? The focus has been what? Bearish. On the day, at least, right? Remember, broad perspective here. Broad perspective. Okay? Let me go back and do this. When we look at London, right? London leading up to equities was higher. So where are the stops? That's equities, but there's trailing stops here, right? So the market came for that. The market ended up going higher to go lower. So what do you think is going to happen now? The predominant focus has been what? Bearish. So anyone who's been short, this should be red. Anyone who's been short, where are their stops now? Probably lower to this high, or maybe this one, or probably the obvious ones here. Because when the market made a new low here, even though it's very short-lived, right? When the market looks like this, and you're looking at it, and everybody else is looking at it, and they're going, hot damn, this is trash. This is a weak market. This is trash. Right, okay. But where are your stops? Wherever they're at, they're going to get dragged. And that, to me, makes the most sense. 5,700 or 5,701. Okay? Now, I'm a little late to that because I was teaching you guys, you know, while all of this was panning out. But equal lows here, low of day, and lunch low that was taken during PM. So this to me should have almost no issue going higher. So, but man, it's just, I don't really see, what I would like to see is like an inversion, like an imbalance that was created right before this run. And we really don't have that. We really don't have that. Really the only clear imbalance to me is that. But I don't know. That's a little bit too... It's not... It's easier to frame a 1 to 2 when it's a lot closer to the low. Because if you were to take something like this, utilizing the rules that I've already given you, then the stop would go down here. And that doesn't make sense to long 92 with the stop at 78 and a target of 701 or even a little bit higher. That's not anywhere close to a 1 to 2. Or are there? You could argue that this could be a down candle, right? Worth longing, but I don't know. I don't know. I tell you what, I'm not going to long this personally, but if you want to mark it up, you can. Okay. If you want to mark it up, you can. See, see how difficult that is to frame a 1 to 2. That you can obviously frame a 1 to 2 easily anywhere and everywhere, but I'm saying with the stop based on the 5-minute time frame, just based on this down candle, the 1 to 2 isn't until way up here, and the low and the highs are only right here. So that's really more like a 1 to 1, and I'm definitely not fucking doing that. You see what I'm saying? So I don't care for this. Does that make sense? So you could watch it, you can mark it up, the 1 to 2. If I was ever, I don't have a signal service, okay? But I'll entertain this for a minute. I imagine myself saying, okay, all right, John, you're going to send people some signals. You'll give them the 1 to 2s. You're not going to give them the 1 to 10s. You know, you'll give them the 1 to 2s. Okay, great. I would look at this and I'd say, yeah, this could be a 1 to 2. But because price has to extend so far above those highs to meet that criteria, I'm not going to send out that idea. I'm not going to send it out. I would have to just let this go or let it pan out, you know, without trading it or sending it out or anything. I would just say, fuck, we'll just come back tomorrow, or we'll come back for the final hour. And then if, you know, if nothing there, then hey, just see you tomorrow. You know, what's the rush? That's exactly how I feel about this. It could work, but that's not enough for me, in my opinion. I just don't trust it. Okay? I just don't trust it. But for the sake of studying purposes, for a 15-second time frame, I know some of you might not have access to it. But, you know, someone like me, I'm going to investigate. I don't care. I'm going to look at it. 1 minute doesn't have it. Okay? 1 minute, or excuse me. Yeah, the 1 minute doesn't have it, but the 15-second does. You have this area right there that the market taps into, trades off of it, goes through it, and then reaches right back into it right there. That would have been a much easier 1 to 2. Does that, so am I making sense here? I don't want you to feel like I'm just talking to you just to run the time down and all that shit. I don't have to stream for a whole hour. Fuck, I don't even have to stream at all. You know, I could stream for 2 hours. I could stream for 30 minutes. But I usually keep it about an hour, because anything after that and your attention goes to dog shit. And then, you know, I'll be like, oh, do you guys remember? And then you'll be like, oh, fuck, I don't remember. Because it's a lot of shit. But let me make my point and then we'll hop off here. The 1 to 2, based on that criteria, you see what I'm saying? Like, the 1 to 2 criteria is there. So it's not even at these highs. It's below it. That is a much easier 1 to 2 versus the one I just gave you based off of this. You're basically entering closer to the highs than you are to the lows. And that is just not how I want to do things. And if anything, price is respecting this imbalance. I don't even think it went halfway either. Right here. Right there. I don't even think it went halfway. And this is also what you sow, you shall reap, right? This was a previous level of distribution that became accumulation. Imbalance inside reaccumulation. Actually, if you just want to use that last up candle, that's fine. Look at that shit. Imbalance, reaccumulation. So this should, again, this probably will not have any real issues going higher. So, I mean, I guess you could probably watch that for a few minutes, but I don't know. It's not enough for me. Okay. So drop a 2 in the chat if you guys got some value today, if you understand the ideas I'm trying to present, if you understand why I look for the things that I do. Like, I want to be able to get closer to the low versus closer to the highs. I don't like buying real close to the highs. It's not comfortable for me. I can do it. I've done it, but it's just not as easy. It's a little bit more difficult, and it waters down the RR, even though probabilities I do believe increase. Okay. But yeah, drop a 2 if you guys pick up what I'm putting down. Yeah, great observation, Jordan. That the high that we made after the data high also did not sweep the higher time frame daily highs on NQ. Right. That's a good point. So NQ not taking the highs, but ES is taking September 3rd high. That should be in your journal. That's noteworthy. Pretty much when I saw it as NCE sweeping the old fractal low. Yeah. I get that. So I just want to watch this for like a couple of minutes. I mean, it's also the open of the new hour as well. So 1 o'clock, right? So 12:59 closes and then 1 opens, drops down into that. Can't go halfway. So what I'm watching here is I'm trying to see, this is kind of sloppy to me. But what I'm looking at, what my eye goes to is this gap, because it's inside these down candles here, despite them having long wicks. And that's what I'm trying to see. Like, okay, we should easily go higher. Well, appreciate the $20, Ibrahim. I'm assuming you want that to go to donations. That's what I'm assuming. And not like a steak dinner, right? You didn't, because you didn't clarify, Ibrahim. You didn't clarify. You didn't say, hey, you know, what is it? 16-ounce medium rare, you know, with a loaded baked potato and a blue moon. Double blue moon, actually. Or do you want me to donate that? What are we doing, Ibrahim? What are we doing? And I agree, capitalist. I agree. Donating on her birthday. That's awesome. But look, you're going to spend your birthday however you want, you know? Let me take a brief look at Nasdaq. Nasdaq's high would be here. Would be let me see, 19,694 and some change. And the Dow's already there. Oh, damn. So Dow, how'd we miss that? Chat, you're fired. ES and NQ made lower lows here, and Dow did not. So that's indication that this is a stop run. Same for Nasdaq. Man, how did we miss that? How did we miss that? Oh man, I might need another energy drink before I go work out here in a minute. Oh, that's right. One of you asked what I had for lunch. I made some pasta last night, and I made some grilled chicken yesterday too. So what I do is I'll meal prep grilled chicken, sometimes rice or rice and beans, whatever. But for the next couple of days, I'm doing grilled chicken and pasta with like just regular marinara sauce or whatever. So I'm trying to be a little bit more healthy. I got some water. Got a water bottle here, so you know, we're trying to live a disciplined lifestyle, you know? But I did some weights yesterday, did some push-ups yesterday. I ate pretty healthy yesterday for the most part. And I did pretty good today so far too. So that's what I've been doing. And we've been waiting so long to see a fucking 2-point move, bro. Can we get this and be done? Like, can we get this and be done? So the PM session for you is 12 p.m., but since I'm an hour ahead, does that mean it starts at 1 p.m.? So here, I'll put this out here, okay? Lunch, the PM session for me starts at 12 Central, okay? So that's going to be 1 p.m. EST. Bam! There's 57. Did we get it? Yeah, 5701. Look at that shit. See those down candles in that gap right there? Just paused right there. And then finally fucking launched for that high. Beautiful. Call the candlesticks, bro. Yeah. Like ICT or some of these guys are the only ones who can call price. Man, fuck y'all. Sorry. Ego's the enemy. All right. 12 p.m. starts the PM session for me. Now, others will tell you that it starts at 12:30. Okay? Others will tell you it starts at 12:30. You can do what you want. And that's from the moment I started teaching, like 2017 or 2018, whatever it was. From the moment I began teaching, I always told people, I will show you the way that I look at things. Other people might look at them differently. They might have different names. They might have different entry techniques or target techniques or money. There's all these things that some people might do differently than me. And that's why I've always said, this is the way that I look at it. This, and I've told you in the past, I look at 12. Some people like 12:30. Okay, well, if you compare and contrast my PM session with other people's PM session, this inversion was below my PM session. Their PM session's way up here, right? And you would have been getting a much better price had you paid attention to mine. And even though it is below theirs too, it's just like, I don't know. I don't fuck with it. But that's what that looks like, okay? I'll show you one more thing. Even though I don't really like it, I'll show you. I'll show you because why not? Why not? This imbalance here was utilized to go lower. What do you see here? Got traded through at 101 and then came back down into it. Didn't I say price should have no issues going higher? Where is it? Is it fucking lower? No. It's fucking higher. It's higher. Because again, all the reasons I already told you. High resistant lows, low resistant highs. What you sow, well, these never hit, so I'm going to take those off. And I told you I wouldn't want to see that, or I wouldn't trade that anyway. But why did it never come down there? Because I already told you, look, it traded through the reaccumulation. Traded through this old imbalance that was utilized to be bearish, that's now bullish. A lot of shit on the left will be utilized on the right. And I know I'm losing views. See, I told you guys, right after that hour, I start losing viewers. I start losing the intent. I'm going to start putting all the fucking gold shit after people start leaving. So that way you fuckers that leave don't get shit. How about that? You know, I know I'm bullshitting. People got jobs and stuff you got to do. I get that. But hey, if you miss it, you miss it. That's your fault. But that, I'm telling you, chat, I'm telling you, every concept, I said this in the MLM industry, and I promise on everything I love, I was the only one to do so. No other educator said that but me. I said every concept can be inverted. I said it once or twice. I didn't harp on it, but I threw it in there for the people who were paying the fuck attention. If they were paying attention, and if they went back and back tested, they would see that there was some validity to what I was telling you. Right? All those inversions up here. Look at that. Nobody in the MLM industry is trading that way. They're not shorting that to go lower. They're not doing that. Well, some of them might. The trade house guys, they definitely know their shit. I'm not trying to talk. I don't talk shit about trade house. Okay, those are my boys. They still are, by the way. When I say the MLM industry, I'm talking about everybody as a whole. All the people on the flyers and shit. I will fucking smoke them out of the water, bro. They're not getting entries like this. They're not doing it. And if they were, they'd be posting it. So how's that? How's that for some shit talking? Motherfuckers. Low, right? Or high resistant lows, excuse me. Up to low resistant highs. What you sow, you shall reap. What you sow, you shall reap. Okay? Now, price, I don't know what price is going to do now. Liquidity taken here, liquidity taken here. I have no idea what this wants to do. Hell, Nasdaq couldn't even do it. Nasdaq couldn't even get up there. Fucking weak. But that's it, guys. All right. So look, hopefully you learned about trade management. How do I know when to move my stop? Look at what I just gave you. Reaccumulation ideas. Right? Shifts in price delivery ideas. If you're bullish, bearish concepts become inversions. You're welcome. Okay? So study that. Don't just take my word for it. Okay? I tell you concepts. This stream was not the greatest in terms of me telling you where price is going to go. That was all of like what? 4 points, 5 points. That's not a super ridiculous move. So I'm not going to say, look at me, I'm the greatest, because I'm not. But I teach you concepts, and then I come in here and I'm like, watch this shit. And it fucking goes where I want it to go. If I can frame something. I can't always frame something. Okay? Or I can frame something and not take it. Because I'm like, that's a little bit janky to me. The risk reward is skewed. I don't like it. I'm not going to fuck with it. But I'll still watch it to see if it does what I think it's going to do. Okay? So it's not like I'm just, getting lucky? Fucking 4 times a week? How many times do I call trades into Discord? You see what I'm saying? That's what makes that easy, though, is this is the things I'm looking for. The very things I've already taught you. Okay? Inversion models, mitigations, reaccumulations, so on and so forth. Okay? But what you need is time, price, and context. Time, PM session. This might have been a new hour here, right? Buying below the open of the hour. That inversion was after the open of the hour, by the way. Okay? Price, inversion, context, liquidity. Time, price, context. Boom! Oh, G, you're right. Fuck. You're right, G. Thank you for reminding me. I'll speed run this really quick, and then I'll do the market review later. All right, for gold, this is real simple, real easy. The other day in the Discord, I told you what? We have created so many equal lows on the way up that it's ridiculous. Did I not say that? Did I not say that on the streams? I've been saying, man, gold keeps going higher, but we have left behind so many lows over and over and over again. Right. That's it, 2591.4. What did today do? I was watching indices more so than gold, but I was watching gold today. Okay, what did we do here? 9:15. What do we do? There's some low resistance highs. Are we going to short anything prior to the highs? Well, you can. I'm not, because there's liquidity there. We yoinked for that. Price trades lower, leaves behind what? An imbalance on the way. Remember this? 2591.4. Equal lows from Friday to 13th. Spooky shit. Spooky shit. Right? So we trade lower. What's this right here? This is the lowest of the down candles. These are consecutive. So what does that make? Oh, yeah, John. Oh, yeah. The highest body is here. The lowest one is here. So if you want to use this one, fine. High, low, higher high that takes liquidity, trades through that, leaves an imbalance on the way to liquidity. That's your mitigation model. Wow. How many opportunities is that, chat? The short on the 5-minute NQ, the short on the 1-minute NQ, the short on the 1-minute ES, the short on gold. That's 4. The one that I gave you today was kind of dog shit, so I'm not gonna say I told you so. Maybe a scalp, sure, but I'm not gonna count that. So that's at least 4. Or how about the 1-minute inversion on NQ to go higher? That's 5. How many 1-2s do you need? Come on, baby. Come on, chat. But that was it. That was it as far as gold. It's been a little frustrating watching this though, because of how long it took out, or how long it took to pan out. Because that formed on the 13th, and then it's like, okay, we go higher and higher and higher, and some highs taken, lower, consolidate, highs taken, lower, another high taken, lower, another high taken, lower. Right? This is the last thing I'll say, then we'll hop off. Because I know some people are going to watch the recording. They're going to be like, oh, fuck, man. I'm used to an hour, and it's an hour and a half, John. Fuck. Get your popcorn ready. I don't know what to tell you. Get your snacks and shit ready to go, my friend. What have I told you for years about gold? I've always said what? It's the most manipulated asset there is. That's what I believe. Test that theory. Test what I tell you. Okay, how many highs did it take to get before we ran the equal lows? Let's count. Okay. 1, 2, 3, 4, 5, 6, 7 times. 7 times. Okay. It took 7 higher highs to form before it ran the lows. Right? And that's what I'll close off with today. Okay? But study that though. That's how gold moves, bro. I don't make the rules. Plus, this is all-time highs as well up here. So there's nothing wrong with trading the metals like this. A lot of people on Twitter are like, oh, gold will rape your account or whatever. No, you just don't know what you're doing. You don't know how to manage risk, and you sure as fuck don't know technical analysis. Okay, respectfully. Okay? But that's the biggest key. The biggest key in metals, more specifically gold. Gold, if there was a hierarchy, right? Like the lobsters in 12 Rules for Life, if there was a hierarchy here of the lobsters on a scale of 1 to 10, if we were to list like S&P, NQ, dollar index, euro, whatever, number 1 for manipulation, gold. That's my opinion. That's what I believe. And I've said that for years. And you look at this chart and tell me that I'm wrong. Tell me. Be like, oh no, John, this is fine. This is clean and it's nice and it's pretty. It's beautiful. You know, it could be a fucking Disney movie. No, bro, this is highly, highly, highly manipulated. And that's fine. As long as you know that going into it. Okay? So if you know, all right, well, we've got some lows. We got equal lows. It's perfect. It's pristine. It's beautiful. It's textbook. We love it. That's what we're going to target. Okay, great. So you can short, but not until traders are knocked out. Okay? That's what that means. That's what I'm trying to tell you. That's why the mitigation model is how it is. Okay? So you know how to trade indices. You know how to trade gold. And you only need 1 or 2 good trades a week. You could have been done for the week on something like this. From 60, or I don't know why I said that. From 2603, which is just right inside the imbalance. Okay? From 2603, you would have took a little bit of drawdown, about 1.5 points. All right. And then it launched down to 2591 or 2590. You could have just went with the 0 level right there. Boom. 90. Okay. So that's what, 12 points for gold. So I think this would have been, if my math is correct, you'd have taken $150 in drawdown for a $1,200 move. Again, I think if my math is correct, but that's not bad. Okay, that's not fucking bad at all. But that'll be a wrap. Okay, now we can close it off. But I hope you guys were able to learn something. I think it was a good stream, given yesterday that I couldn't close it off without internet troubles. But I think you guys learned a lot today. So that's going to be it. All right. I'll put out the market review later tonight. It'll be very brief because I'll just, it'll be like 15 minutes or less, just to give you the dessert, the icing on the cake of this particular stream. Okay. We'll be here same time, same place tomorrow on Wednesday for the next live session. Okay. Y'all be good. Be blessed. And I'll see you then.
Trying to feel what I should feel, and I was certain, oh, I'd never find a way to heal. Then I